Welcome, fellow economic adventurers, to the dazzling world of the services sector. Prepare to have your mind blown, your funny bones tickled, and possibly your belief in traditional economics completely shattered. Today, brought to you by the undisputed masters of learning, LTTW. Because let's be honest, if Talaivar can lead a nation, he can certainly lead a PowerPoint presentation as well. While agriculture is the emotional man and the industry is the struggling middle child with performance issues, services is the modern IT guy with Ray-Ban glasses and a MacBook riding an Ola, ordering Swiggy and paying through a UPI. Beyond the schedule, our streamlined roadmap for tackling the ever bustling services sector. Yes, L28 is our start today. Who needs boring old factories when you can have apps delivers an instant gratification? L- Here we are at the introduction, the services sector, often termed the tertiary sector, is apparently a big deal in the global economy. Who knew? And for India, it's been the most dynamic and fastest growing sector. It's like the Usain Bolt of the Indian economy, leaving agriculture and industry panning in its dust. It's driving economic transformation and contributing significantly to the nation's GDP and employment landscape. So, let's make it clear, guys. It's basically it's crusaders. The services sector is here to save the day. And again, don't worry, it's not a Hogwarts house. It is the sector where India earns, learns, and churns out everything from chaiwalas to cybersecurity experts. Now let's look into the importance of the services sector to India's GDP and employment. It's not just important, it's a powerhouse, consistently demonstrating robust growth. It's like the Hulk of the Indian economy, just smashing its way through old tradition. If India's economy is a Tamil blockbuster, services sector is the Talaivar himself, delivering dialogues, kicking inflation, and bringing foreign exchange like a superstar. 53.42% of GVE from services. That's more than how much your neighbor auntie, gossips about your UPSC attempts. And while it contributes max to GDP, employment is still lagging like Airtel in remote Tamil Nadu. This isn't just a trend, folks. It's a fundamental structural shift. We are moving from a quaint farm based economy to one that's increasingly reliant on services. So, less old MacDonald had a farm and more the Wolf of Wall Street, but with less questionable financial practices, hopefully. Now, let's look about the significance, the five pillars of our economic awesomeness. Dominant contributor to GDP. It's the backbone of India, apparently. So, if India were a person, the services sector would be its spine. Without it, we'd all be just a floppy mess. And guess what? As we saw earlier, it accounts for approximately 53.42% of India's total GVA. That's more than half. It's practically carrying the economy on its shoulders like Atlas, but with spreadsheets instead of the world. Engine of growth. It's not just contributing; it's driving growth, frequently outpacing that of agriculture and industry. It's the turbocharged engine of the Indian economy, leaving the other sectors in the dust. Vroom vroom. That's the sound which the services sector makes. Employment generation. While it's over half of the GDP, its employment share is still relatively low. Don't worry, guys, it still offers a diverse range of employment opportunity from highly skilled IT wizards to tourism guides who probably have to deal with endless selfie requests. Attraction to attraction of FDI. Foreign direct investment, baby. IT, financial services, telecom, they are all like magnets for global investors. It's not just about only money, it's technology, best practices, and global market linkages. Basically, the services sector is India's most charming friend on Tinder, attracting all the good matches. Export potential. India is a global leader in services exports, especially IT and IT enabled services. We are basically shipping out our brain power and making a fortune. It helps bridge the trade deficit and enhances India's global economic standing. Take that trade deficit out. Now let's look into the Avengers of the services sector, or we can call it key subsector. IT and ITES. This is where the magic happens. Software development, BPO, KPO, RPO. It's like a linguistic soup of acronyms that basically means India is a global brain trust. Our strong talent pool, cost effectiveness, and quality make us the undisputed global IT hub. So, when your app works perfectly, you probably have an Indian IT professional to thank. You're welcome, world. We are talking TCS, Infosys, Wipro, the big guns, and hubs. Bengaluru, Hyderabad, Chennai, basically where all the cool kids are coding. It is India's overachiever child earns in dollars but sleeps in beanbags. Next comes tourism, hotels, travel agencies, tour operators, basically everything you need to spend your hard earned cash while experiencing India's rich cultural heritage, diverse landscapes, and spiritual destinations. See, we are not only selling vacations, we are selling enlightenment and Instagram worthy moments. Who doesn't like that Instagram worthy moments, right? And guess what? India recorded 9.66 million foreign tourist arrivals in 2024. That's a lot of happy tourists selling peace of mind while the tourists get looted by auto rickshaws. Financial services, banking, insurance, capital markets, the unsung heroes who make sure your money moves around, gets invested, and hopefully multiplies. A well developed financial sector is crucial for capital allocation, savings mobilization, and economic growth. So, next time when you withdraw cash from ATM, remember you're participating in something crucial. This is where bankers do yoga with your money, stretch it, bend it, and break it. Education, from pre primary to higher education, vocal training, coaching centers, and even ed tech. It's all about human capital formation, skill development, research, and innovation. Basically, we are building a smarter, more skilled workforce with one student at a time. And you have got a lot of higher education institutions with a lot of diplomas being handed out. It's like producing engineers who become UPSC aspirants and they become faculty at the later stages. That's what the reality scenario is. Health, hospitals, clinics, diagnostic centers, pharmaceuticals, everything that keeps us from, not being well. There's always growing demand for rising incomes, increased health awareness, and the burden of both communicable and non communicable diseases. So, as we get richer, and more stressed, our demand for healthcare only goes up. It's a win win for the health sector, not so much for our stress levels. From Ayurveda to Apollo, India's Doctor Strange in the global healing market. That's what the key subsectors are about. Now let's look into the digital economy or India going full cyborg with one transaction at a time. The digital economy. This is where India truly shines like a neon sign in a futuristic city. It's an economy based on digital technologies, and India has embarked on an ambitious digital transformation journey. We are basically living in a sci fi movie now, thanks to supportive Digital India, where you may not get water in taps, but Wi Fi is stronger than emotions. We have a digital economy so advanced that even auto now accepts UPA faster than some IAS mains results. Government policies increasing smartphone penetration and affordable data. Let's look about the UPI Unified Payments Interface. This isn't just a payment state system. It's a revolution that makes payments incredibly easy and accessible. It's like having a magic wand for your money, making it jump from one bank account to another with a tap. And get this, UPI process 23.49 lakh crores across 16.58 billion financial transactions in a single month. India is practically swimming in digital transactions, and we account for around 49% of global real-time payment transactions. We are basically the world champions of instant payments, faster than Talaiva's sunglasses flip, like 23.49 lakh crores in a month. Even your future salary in 50 times can't match that. Digital India, a flagship program launched in 2015 to transform India into a digitally empowered society and knowledge economy. It's got three core vision areas because apparently one vision was not at all enough for such an ambitious program: digital infrastructure, e governance, and digital empowerment. Internet penetration from 250 million in 2014 to over 970 million by 2023. We are practically living on the internet now. That's a lot of money that did not disappear into ether. Good job, Digital India. It's power to empower, unless, of course, there's a power cut. FinTech, the intersection of finance and technology. It's all about innovations that improve and automate the delivery of use of financial services. Digital payments, digital lending, insurtech, it's all part of the future. And India is leading the charge. We even ranked third globally in fintech funding despite a 33% decline. So, even when things are slowing down, we are still pretty darn good at it. Where apps lend you money to buy courses to crack jobs which you even won't apply for. That's for fintech for you. Let's look into now gig economy and platform economy. Introducing the gig economy and platform economy. These are evolving models of work characterized by flexible, temporary, or task based jobs. So basically, less 9 to 5 and more whenever, wherever. India, with its large workforce, high youth population, and increasing digital penetration, is basically a playground for these new forms of work. This is not just odd jobs. This is a full blown freelance freedom meets confusion jobs. Gig economy. This is where individuals engage in short term, temporary, or freelance work. They are independent work contractors, freelancers, or temporary staff. Think of them as the economic equivalent of a highly skilled mercenary. They are flexible for the mission, then they are off to the next one. Characteristics include flexibility, task based work, and varied skill levels. Niti Aayog projected the gig workforce to rise to 23.5 million by 2029-30. That's a lot of flexible workers to handle with. Now let's look into platform economy. This is the subset of the gig economy where digital platforms act as intermediaries. So Uber, Swiggy, Zomato, they are not just apps, they are the puppet masters pulling the strings of the gig workforce. Digital intermediation, algorithmic management, and network effects are the name of the game. So basically, an algorithm decides if you get that food delivery, the more people use the app, the more powerful it gets. It's like Skynet, but for ordering biryani. Let's look into the benefits of gig and platform economy. Flexibility and autonomy for workers. Workers can choose when, where, and how much to work. It's the ultimate work life balance, perfect for students, caregivers, or anyone who just can't deal with tyranny of a fixed schedule. Increased employment opportunities, low entry barriers. So, even if you got minimal skills, you can probably find a gig. It's truly inclusive unless you don't have a smartphone or internet. In which case, this is tough luck. Income supplement, need extra cash for the new gadget or maybe just to pay the rent, the gig economy is here to help. Skill development, you can acquire new skills, gain experience, and diversify the portfolios. So, delivering food today, designing websites tomorrow. Now, possibilities are endless in this platform or this economy. Cost efficiency for businesses, these businesses get a flexible workforce without all these pesky fixed costs like benefits and office space. It's like having employees but without all the, well, being an employee. But wait, there's always a flip side. The challenges of gig and platform economy. Job insecurity and income stability. No fixed salaries, no guaranteed work hours. It's like financial roller coaster but without the fun. Many gig workers earn less than 5 lakh annually with 77.6% earning 2.5 lakhs or less. So while the platforms are making billions, the workers are definitely not making that much. Today's task is tomorrow's. This gig is not available. So we have to always be ready to change it. Lack of social security and benefits. No minimum wage, no paid leave, no health insurance, no provident fund, or no pension. They are independent contractors, remember, which is a fancy way of saying you're on your own, pal. Algorithmic control and lack of transparency. Algorithms decide everything, work allocation, pricing, performance rating. It's like being managed by a faceless, uncaring robot. And if you have a grievance, limited recourse. Good luck arguing with the line of code. One bad review and boom, your shadow banned like a banned WhatsApp forward group. Limited bargaining power. It's hard to unionize when you're just an individual contract dealing with a giant corporation. So you pretty much have to accept whatever the platform dictates. Digital divide. No smartphones, no stable internet, no digital literacy. Then the gig economy isn't just for you. This just widens the gap between the tech savvy and, well, everyone else as well. Finally, the government initiatives and policy responses. Because even the government realized letting the wild west of the gig economy run rampant might not be the best idea. Code on Social Security. This landmark legislation actually included gig workers and platform workers in its definition. It's like the government finally acknowledged that these people exist. They are planning social security schemes for them. The implementation is still evolving, which is government speak for we are working on it. Don't hold your breath. Sounds serious, but still being figured out. E-Shram portal, a national database for unorganized workers, including gig workers. So now the government knows who they are. This might lead them to potentially accessing social security benefits in this future. It's literally potentially, so not comfort. It's like Aadhaar for unorganized workers. Now your gig life is official. Congrats! State level financial inclusion. New credit models are helping gig workers access formal credit, so maybe they can finally get a loan for new scooter. State level initiatives. Some states are actually doing something. Rajasthan, bless its heart, mandated aggregators to pay platform based gig worker welfare fees. It's like a tax but for helping gig workers. And Karnataka is proposing a gig workers welfare board. It's just a start. Rajasthan and Karnataka are trying to play elder sibling in a family of sleepy cousins. And now the conclusion. The services sector is undeniably the primary engine of India's economic growth. It's crucial for generating employment, attracting investment, and bolstering the foreign exchange earnings. The digital economy with UPI and Digital India has fundamentally transformed governance, financial inclusion, and our daily life as well. We are global leader in public or digital in public infrastructure. The services sector is like superstar Rajini, consistent, stylish, and carrying the entire economy on its shoulders. Whether it's IT nerd, the Uber driver, or the gig worker trying to survive algorithm tantrums, this sector is where the action is. But as always, like a mass masala film, we need a twist ending, which is inclusive policies, fair work conditions, and a little less drama from the digital apps. And only then will the story have a real Talaivar style climax. If you manage to sit through this lecture without falling asleep or throwing your pen at the screen, you deserve a standing ovation or at least a parleji and a tea. We just made the services sector more entertaining than your CA friend explaining GST at a party. Now don't act like a freeloading gig worker. Hit that subscribe button on YouTube and join our Telegram channel. Or we'll have to start sending you PDFs of tax law at 3 a.m. Go ahead, do your nation a service, support the services sector by supporting us. Thank you.